Hi everyone, let's talk about AMC Entertainment Holding. It's a company through its subsidiaries involved in theatrical exhibition business. Market cap is 19 billion. The revenue is forecasted to grow over 40% per year. There's a bunch of risk. They're printing shares out to finance the business. They have currently negative shareholder equity and unprofitable. They are unprofitable, not forecasted even to become profitable in the next 3 years, and I guess highly volatile share price. This when within the year, this is currently 831%, and I guess from the October 5th, for example, till the peak in June, 1.1400. So that's pretty significant. Insane, just insane what happened to this stock. And there's the competitors: Cinemark Holding, IMAX, Reading Entertainment, International, Next Star Media. They had a lot of earning updates. They entered the index annual general meeting and below change. And yeah, they printed the shares out back in late of March or April. But anyway, shareholder equity, shareholder returns, 1 year return. Somehow this is not showing the same as the Google says, 727%. Anyway, the price volatility is higher than the industry's, higher than the average market volatility. But these numbers outbeats the industry, also the market. And here's the deal. This is fundamentals. Revenue 875 million, earnings minus 2.76 billion, and based on that the market cap is calculated to be 19 billion. I'm not sure if this is accurate, but since they don't generate the positive earnings, it's impossible to calculate the P ratio because price to earnings. So unfortunately, but PS ratio 22. I guess this is overbroad, but yeah, who know where the price could be going next? Because valuation side, we see that current valuation $38 per share. This is pure fundamentals. The fair valuation should be around 0.6, or on the other sides $11 per share. So this is pretty odd to me, because I guess they, on the financial health, I guess there's we'll be back to the valuation, but I just want to say the future growth is forecasted hugely to return 59%. The revenue drops since the coronavirus hit it pretty high. They were profitable before the corona, but currently they are making huge losses. December last year, 4.5 billion in minus in the earnings. Earnings per share is forecasted to grow, but not as fast as we, like investors, would like to. Past performance, historical annual earning growth decreased by 72%. So that is meaning from the profitable company, which generates 63 million in a year, 2.4 the profit margin, to minus 2.7 billion, minus 315 profit margin in percentages. Company is unprofitable. And just a quick look on the fundamentals, the financial health side. Yeah, so as I guessed, they have large level of debt, 5.5 billion, equity minus 1.4, and they managed to increase the level of cash 1.8 billion. I guess, yeah, and by the way, they decreased the dividends that they had few years. And if we take a look, the shares outstanding, yeah, so they actually did the ICO, so now they have doubled their shares outstanding with the decreasing sales, minus 77% decreased compared to last 12 months. That's huge drop. And back to valuation side, I guess this is more accurate, $11.75 per share. That is meaning 69% downside. And in good scenarios, 12-month forecast, $16. Same numbers have the market watch. So there is high possibilities that it would trending with this kind of lines, within these lines. So we see the upper line showing 50. So there's high chances to the 50 and high chances to the 16. So there's, once it hit the line, upper line, it rebounds with decreasing, and we saw already that when it's decreasing, it hits this kind of bottom line. So there's a lot going on, but I guess it would trending within these two lines, and in perfect scenarios, this would be hitting $60, I guess, just if there would be a lot of short squeeze things going on and a lot of good news, recovery, full recovery on the earnings side, full recovery on the revenue, and so on. That would be affecting very well for the business. But anyway, the dividend yield is forecasted. I'm not sure when they would pay next time the dividends, 0.036%. That is the dividend yield. And since they are not paying currently to the shareholders, it's forecasted that future payout would be, yeah, paying a dividend while loss making. So possibly in 2024 they would take the debt to pay as the dividends to the shareholders. And insider transactions, I guess, yeah, there's on the seller side a lot of individuals, executive VP, CMO, director, lead independent director, I guess there's a director, senior VP, chief human resource officer, executive vice president of US operations. There's a lot. And here's the one of the companies having selling this year, 18th of May, 426 million in the valuation sold. There's another company decreasing last year, and third company, but yeah, there's only in the seller side. Ownership breakdown: 74% holding the general public, institutions 25, insiders 0.3, state and government 0.03, and private companies owning 10,000 shares. Top shareholders, we see once again they are increasing. There's only one who decreased and reporting holding date, I guess, end of June. Yeah, on the all. Only one decreased. The California State Teachers Retirement System decreased 2%. Others are loading huge and big. Vanguard as in the top. BlackRock second, 1.7 billion in current valuation, and BlackRock same to 1.2 billion holding and increasing. And yeah, as I said, the shares outstanding doubles compared to last 12 months, 2.5 times. And this is actually, the shares price is highly volatile. So as I said, in this diagram. So there's a tunnel, it trading. This is already technical analyze that is showing. But anyway, the investing.com summarized the stock for long-term investors as a strong buy. Thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.